Okay, welcome everybody to Wall Street Reporter's next super stock live stream for today, October 21st, 2020. We have with us Brent Sun, CEO of Logiq, who you're gonna meet in just a minute. Those of you who are new to the next super stock format, our goal at Wall Street Reporter's next super stock live stream events is to bring you stocks which have 10x to 100x upside potential. You've seen already, we've had 3 10-baggers plus in the last 6 months, stocks that have gone between 1,300 and 2,000%. Of course, we also have CloudMD, which right now is going crazy. The stock is up 500% in the 3 weeks since they debuted. Logiq, who you're going to meet right now, is up, I think, 200%, if I'm doing my math correctly, since they debuted in late July. And I believe there's a lot of upside from here. This could be easily a 10-bagger based on just the comps, the valuation comps with the peers. So again, our goal is to show you companies which have three things going for them. One, they're going after big multi-billion-dollar market opportunities. Number two, they're right now at key inflection points with massive upside potential, and they have multiple catalysts in place that could unleash that growth. So the format is Brent is going to present for about 20 minutes. Then we'll open up for Q&A, and it's really your questions that make these events special. So please watch the presentation, ask Brent your questions, and then decide for yourself if Logiq is going to be our next super stock, our next 10x to 100x winner. With that said, Brent, take it away.
Thanks, Jack, and welcome everyone. Much appreciated and glad to be on again. I'll take you all through our presentation, and then as Jack mentioned, we'll open it up for questions. We have a disclaimer that I will not read out to everyone because that could very well take the entire 20 minutes. So Logiq and what we do. Very simply put, we are an e-commerce enablement platform. What does that mean? That means we help small businesses get their offline business online. We like to call ourselves the Shopify for mobile. What I typically point out is that the difference between our platform and Shopify's is that ours is specifically for the mobile phone, not for a desktop or laptop computer. And then we have a focus on emerging markets rather than developed markets as Shopify and the larger peers do. That emerging market focus is currently centered around Southeast Asia. Indonesia is right now the hottest emerging market in the world, with one of their stocks being, according to Barron's, the best performing global tech stock in the world, C Company Limited, which is on the New York Stock Exchange. So our two primary business units are Logiq, which does the e-commerce enablement for small businesses, and then Logiq, which is very simply put, advertising technology and marketing technology. We call it ad tech and martech solutions. What that does is Logiq gets the businesses online. Logiq helps those businesses promote their goods and services and helps people find them. So two critical components of getting online are having the presence and then letting customers know that you're basically online and helping sell more products and services. Our overall business is benefiting considerably from what is now the new normal of working from home, which I currently am, and I'm sure many of you in the audience are very familiar with as well. Online shopping, huge beneficiary of this year's events through COVID, and very interestingly, the public peers that we have in our universe are a combination of household names and then some that may not be, but are listed on NASDAQ and the New York Stock Exchange and currently carry very large market caps and therefore very large valuations. So many of you know Shopify, C, which is SE on the New York Stock Exchange, Wix, Jumia, Amazon, of course, and then Etsy, WebEx, and BigCommerce. What you can also see is our growth trajectory from the first year we started 6 years ago. We've grown from almost 13 million in revenues to a trailing 12-month revenue run rate of about 43 million. What we have here to put things in perspective is the vast opportunity for global mobile commerce. We like to look at things in terms of MCommerce or mobile commerce versus just pure e-commerce, because the phone plays such a critical component in it. As you can see here, there are a tremendous number of online mobile users, huge penetration globally, and specifically in the emerging markets that we're targeting in Southeast Asia, an additional huge opportunity there. US, massive MCommerce market as well. So I think the bottom line here is that the overall opportunity is substantial in just capturing a small fraction of it, which we have, and that will continue to grow, is extremely meaningful to us on the business front, and certainly trying to scale up the valuation. Talking about Southeast Asia, to enable those of you who are not familiar with it as a region, there are roughly about 700 million people in Southeast Asia, with Indonesia being the largest country within. So it is clearly a massive market. So behind China and India, Southeast Asia would be ranked third. 90% of those people use smartphones. So the difference between emerging markets there, that is an emerging market, and then the US as a developed market, is that roughly 80% of us here in the US have desktop and laptop computers, but there it's the inverse. It's about 20%. So 90% of the people rely upon smartphones to get on the internet, conduct business, and certainly shop for things. To give you an idea of our platform and not getting too much into the weeds, if you look at the top, there are basically 4 pillars of mobile commerce. We cover all 4. And down at the bottom, if you see the purple and the blue rectangles there, Data Logiq and App Logiq, our 2 business units, encompass parts of the overall platform. In order to make this a bit simpler, I'm going to give an example of how we differentiate and how we're able to capture business. So with this example, why Logiq? Why our platform? So if you look at emerging markets, the one thing that they all have in common is traffic. If you look at some of the major cities in Southeast Asia, for example, I'm up near New York and New Jersey. New York here in the States is considered a large city with roughly 10 million people. Jakarta, Indonesia has 34 million. Bangkok, 17 million. Manila, 23 million. Hanoi, 8 million. Therefore, traffic in these densely populated areas is an average of about an hour to go 1 mile. So what does that do? I mean, in addition to it being a huge pain in creating gridlock, efficiency for people working in their offices or needing things to take home becomes extremely challenging. So, how do you go about getting lunch or picking up items for your home when you only have an hour to spare during the workday, and it takes you an hour to get home, to get to work, and an hour to get home? Well, a solution from our platform is what we've launched in Indonesia, and that is the ability to order products or food through the phone, through our app. You can make payments through the app, and then our couriers actually will pick up and deliver on foot. And the way that we've designed it is that our average delivery time in Jakarta is 14 minutes versus 45 minutes by competitors. The reason I use this as an example is because it's a very real problem, a real pain point in densely populated urban areas that our platform has created a solution for. So what has this solution led to? Well, in addition to our revenue run rate, which we're quite proud of, it's also attracted partners and customers, which, as you can see on this screen, on this part of the presentation, ShopeePay, which is part of C. They have an $85 billion market value. Tech Mahindra, $6.2 billion. Orange in Europe with almost a $30 billion market cap. Then Line in Taiwan, with a $12 billion market cap, and then several other North American-based customers who also work with us. The bottom line here is that although we are an emerging platform and a microcap company, we have absolutely gained the attention of some very large partners and customers who have diligenced us, chosen to work with us, and are partnered with us or are actual customers of ours. So validation, I believe, is evident in the relationships we have with some very large partners and customers. We believe that this trend will continue because there's a saying that the hardest one to get is the first one. Where we are currently with the addition of ShopeePay and then Tech Mahindra in the past 2 months, it has clearly brought other very large partners and customers to us, which we'll be starting to describe in the near future. Financial highlights, again, we've had a very impressive growth rate over the years. However, what we're looking at over the next 2 years, we believe is even more exciting. We intend to finish out this year. Year to date, we're at 24 million with about 17% average gross margins. We're in the middle of a transition to higher margin business. When we finish the year, we have publicly stated that we're looking at about 38 million total for the year. Our gross margins will be about 18-19%. Then next year, we're anticipating about 43 million in revenue with 35% gross margins, so considerable jump in average gross margins. And then looking out to 2022, we're forecasting almost 70 million in revenues with 42% gross margins and being EBITDA positive. So we're on track to some very good results. We're highly enthusiastic about the next 2 years, and you as potential investors or current investors will see some exciting things in terms of both top line revenue and then margin improvement. That brings us to public peer valuation. The companies that I mentioned earlier are illustrated here. The average price to revenue, which is the benchmarked valuation metric, comes out to almost 26 times revenues. Where we stand currently, we're right at about 3 times revenues. You look out over the next 2 years, you can easily do the math and see that if you compare us to the averages out there now, we are currently trading at a very large discount to the peers. So what's next? If you look at the past 3 key announcements we've made since August, what you'll see is an interesting path. We announced the acquisition of Fixel AI back in August. September 3rd, we named my colleague Tom Furukawa, who's a 30-year tech veteran with 26 years at IBM Tivoli, Yahoo, and then Magnite, which is on the New York Stock Exchange. Tom led the ad tech and martech teams at those enterprises, and he is currently running the ad tech business for us and has taken the recent role as CEO, and I am currently president and executive chairman. October 1st, we announced that Josh Jacobs has joined our board of directors. Josh is executive chairman of Maven. You may not be familiar with Maven, but many of you will be familiar with Sports Illustrated. That is a Maven brand. TheStreet.com with Jim Cramer, that is a Maven brand, and several other also well-known brands underneath Maven. And Josh is also the former president of Omnicom, which is one of the top 3 ad agencies in the world. He, very much like Tom, is a 30-year veteran of digital advertising and marketing. So why? Why did we acquire Fixel? Why did we promote Tom to CEO? Why did we add Josh Jacobs to the board? Well, if you look at online business, in addition to getting your offline business online, the single biggest challenge for those online businesses is getting customers to find them, getting customers to see their products and services and buying them. So how is this done? Digital advertising and marketing. So earlier I pointed out ad tech and martech. That's what digital advertising and marketing encompasses. So through our Data Logiq business unit, we are right now creating a next generation platform to enable e-commerce companies that we've brought online and that we'll be bringing online the one thing that they need the most: easier and better access to new customers. So what you'll see in addition to these past 3 announcements, you'll see future announcements which start to show how will we implement an ad tech and martech component into the business, and how will this impact us overall. So as we have here in blue, stay tuned for more. Key takeaways. Jack likes to ask 3 questions, which I'm sure he'll do shortly. But the takeaways that I would point to are that, what do? E-commerce enablement. We are in a very high growth, multi-billion-dollar market, both in North America as well as emerging markets, and again, specifically Southeast Asia. Market valuation versus our peers, we're at 3x revenues. The peer group is 26x revenues. We've got catalysts in place for valuation expansion. If you look at the recent announcements on new partnerships and major initiatives, that should help narrow this valuation gap that exists. We're on track for record revenue growth this year and onwards. And then the evolution of business by adding in and focusing on ad tech and martech, thereby enabling higher growth. So with that, I can open it up to Q&A. Jack?
Yeah, Brent, you hear me? Okay. Okay, let's see if we have any questions. All right, no questions yet. Oh, no, I see. Okay, we got a question here. Actually, we got a couple questions that came in earlier, which I saw. Most of them are related to uplisting. What's the status? I know you filed for NASDAQ uplisting a while back. What's happening with that?
Great question. Okay, so just yesterday we actually had an update. Let me be a little careful about how I phrase this. To put things in context, when we make announcements of this sort, legal counsel does encourage us to be more conservative in order to manage expectations in the event that things, for some reason, do not pan out. But what I can say is that we are in process, and we've actually been in process for 2 months. So it's not something that we literally just launched into day before yesterday and then announced yesterday. We're pretty far along. We're going to be engaging in an actual IPO in Canada on the NEO exchange. Why the NEO? The NEO of the 2 exchanges, I'm sorry, of the 4 exchanges that are in Canada right now, you've got the TSX, which is a senior stock exchange along the lines of the New York Stock Exchange, NASDAQ, the London, Hong Kong. It is a tier 1 exchange globally. The other tier 1 exchange in Canada is the NEO. It is a fully electronic platform that only launched 5 years ago. We like them because of the technology element to it. And they also have an existing program within, which is called the Passport program. So step one will be to do the IPO in Canada. And then step two is to engage in the Passport program, where the NEO will then go exchange to exchange with the NYSE and apply on our behalf to uplist us from the OTC market to the New York Stock Exchange. So in contrast to trying to uplist yourself from OTC to NASDAQ or OTC to New York, the exchange actually does it for you. So I guess simplistically describing that is an exchange to exchange listing. So we like that a lot. You'll be hearing more about that, and that's where we are. What you'll also see, there will be an engagement and of an investment bank to lead the IPO. That should be next up on the announcement calendar. So you'll see things sequentially happening as we move forward.
Okay, so that's looking good. Okay, oh, we got a couple of questions coming in. Okay, so Kevin is asking, what's the update on the M&A that was supposed to be led by Benchmark? That was the announcement from July. What's happening there?
Sure. Okay, so we've had a combination of inbound and outbound opportunities. When I say inbound, those are representative of accretive acquisitions that we're looking at to bring in-house. Fixel AI is one. I believe we've also mentioned that there are other accretive strategic acquisitions that we're looking at domestically. And then on an outbound basis, what that means is, are there business units or segments of our business that have attracted interest from outside on either a strategic investment, strategic acquisition, or strategic partnership basis? Absolutely, there have been. That part comes down to price. We have also indicated publicly that we are currently in discussions with potential investors on the strategic side. So in answer to your question, Kevin, both sides of that are moving along. When we do finalize things, we will make an announcement, but I hope I've answered your question.
Okay, we have Jeremy. He's asking about the delivery side. He's asking, how much of the business will be from delivery by foot? Will there be challenges in handling all these workers? Will they be independent contractors?
Okay, so
independent contractor law in outside of the U.S., right? The labor laws are pretty flexible in Asia.
Right. Okay. I'm guessing, and perhaps you could clarify. Is the question surrounding the current challenges that are facing Uber and Lyft as it relates to contract?
I think he might be asking that. In other words, I think he's asking, Jeremy, if you want to like clarify the question, I think he's asking how much of that what percentage of that business, I guess what's the percentage that constitutes of the revenues, and their, challenges with, handling, actually all these workers.
Sure. Okay.
Contractors.
No, that's actually a great question. So the Indonesia business, without getting too granular, the way that we've been carrying the business on the balance sheet is investment in associates. So if you look at our 10Q and our 10Qs and our 10K, we've supported that business through an investment over the past 3 years, but we have not consolidated it into our revenues. So what you see for 2019 and previously does not include the Indonesia business. Okay. Q1 and Q2 and soon to be Q3 also does not, because we've only announced that we're increasing the direct ownership of the business to 51%. So what you'll see in our 10K next year for part of this year that we're able to include the majority ownership, that will be included in the results on the income side. But on the balance sheet, what you see currently is it is a line item for investment in associate. In speaking to that a little more, what we've also indicated publicly, we've put in about $4.5 million over the past 3 years. If you look at the benchmark valuations, the way that's tracked is you look at gross transaction volume. We're currently at about 25 million in GTV. The benchmark valuations out there are 3 to 4x GTV, and implied valuation is 75 to 100 million dollars on a business that we've invested 4.5 million into. Answering your part of the question about contract workers, frankly, Uber has made an endeavor into Southeast Asia, did not go well. They've sold their part of the business to Grab out of Singapore. The way that independent contractors are treated there is very different than here. So it's not currently a problem, and nor do we anticipate it being. Much like here, people are on 1099. We do something similar there. So the 1,100 couriers that we have there are contractors, and there's currently no labor restrictions or concerns, nor do we anticipate there being.
Okay. Kevin is asking a follow-up question here. He's asking, is the NASDAQ plan uplisting, is that out of the picture? Are you going to go to basically NEO and then NYSE? And also, what's the update on, I think you announced a new auditor, for the NASDAQ, fulfilling the NASDAQ requirement.
Sure. Okay. So, I don't know if Kevin, if you've followed the past live streams or our quarterly conference calls, and I was actually asked this question this morning when we had an institutional investor on with us. We did apply for NASDAQ earlier in the year. To put things in perspective there, every year they have around 300 companies apply for uplisting. So uplisting from the OTC markets to NASDAQ. Companies generally do not apply if they do not match the quantitative requirements. So in essence, all 300 companies do meet the requirements to uplist. However, if you look at NASDAQ as an organization, they've got 5 examiners that are responsible for, and in this order, IPOs, of which the IPO calendar this year has been significant, continued listings, and then uplistings. So are they busy, and have they been busy historically? Absolutely. Do we rank as a priority? Absolutely not. You look at the number of actual uplistings per year out of the 300 or so that apply, you usually see about 25 to 30 per year. This year, I believe it's been about 11 to 15. You could probably clarify that with NASDAQ, but it's been significantly less. So coming out into an environment where if we were able to uplist, we don't have much of an impact. You don't immediately attract institutional and retail investors just because you uplist. Is it true that through uplisting you can gain greater visibility and liquidity and credibility? Of course, but if you go out without an underwriter doing a secondary or an IPO, you come out at a call it $250, $300 million market cap, and you come out in an environment where IPOs are gaining all of the market share and media attention. It's the analogy of the tree falling in the forest. Right. So I hope that's answered the question. So again, going to the NEO, Canada, where Shopify is domiciled, where Shopify started out, where about 30% of the investor base in Shopify is Canadian. About 15% of our investor base is Canadian as well. So we also believe that will attract a greater excitement by listing there first and then coming back to the New York Stock Exchange when our market cap is probably much higher than where we are now. We think that's a good way to go.
Okay. We have time for just one last question. And this is again coming from Kevin. Kevin is asking a lot of questions today. It's good. So he's asking, is the current revenue, is the current Logiq revenue including GoPay? And if not, when is that going to be included?
Okay, good question, Kevin. So as I outlined earlier, look at our 10Qs and our 10K, and what you'll see on the balance sheet is a line item that says in amount due from associate. What does that mean? The associate is our Indonesia entity, which is called Wayland Indonesia Perkasa, or WIP. That's also been in our filings. It's been in press releases. That is the Indonesia entity that we formed 3 years ago in order to do business in Indonesia. So at the time, foreign ownership was restricted to a minority ownership. So when we started, we could only own 49%. The management team there in Indonesia, which built and leads the business and manages the business there, they have 20%. And then the remaining amount was in a local entity that we have actual board control over. So we have effective control of 80%, although we only recently announced that we have direct ownership of 51%. So what you'll see in terms of contribution to the financials is not reflected in the slide. The slides here has not been reflected in the 10Qs and will be reflected in the 10K for 2020, albeit only for roughly Q4. So the contribution you'll really start to see is Q4 and then going forward. So the amounts that I alluded to earlier for 2021 and 22, that actually does not include it as well. So will there be a contribution that could be quite attractive? Absolutely. But what we've got for this year, you'll see in Q4, what you'll see next year and onwards will be predominantly AppLogic and DataLogic, and then you'll see a very high margin contribution from GoLogic and PayLogic, our two divisions in Indonesia.
Okay, wow, so very exciting developments. Brent, so I think that kind of wraps it up. We're going to have you back probably the next 10 days or so for an update. I know you have a lot of stuff happening right now, so we'll have you back on one of our live chats. We'll get into some detailed questions. Very exciting things. I think as when you first came onto the next Superstock platform, one of the criteria that we have here is, we're looking for a company which has that clear path or runway to that 10x upside. And in the case of from Logiq, what I kind of saw right away is that upside would be from that that shrinking of that valuation gap compared to that peer group. And I think once you have that, you're on NEO, there's a little more access to institutions, more of that buying. We could definitely see that happen. And the stock is already up from $4 to, I think we hit a high of was it 12 the other day? 11? Was it 10?
Almost 11. Yeah, 1080.
Yeah, it's hard to keep track of these things. A lot of stocks are moving. So all right, so good things are happening. Brent, we'll see you on in about 10 days.
Awesome. Jack, thanks. Thanks to the viewers. Thanks for the questions, Kevin.